If you're a sole trader, landlord, or small business owner in the UK, there is a big tax change coming your way, making tax digital. And it completely changed how you report your income to HMRC. Instead of filling your return once a year, as close to deadline as possible, you're required to send updates every 3 months. In this video, I'll explain what making tax digital is, who it applies to, when it starts, if it applies to you, and what you should do now to start preparing for it. Let's break it down into simple terms. The idea is simple. Instead of keeping spreadsheets, paper records, and your receipts in the shoebox, business will need to keep digital records of expenses and income and send them to HMRC throughout the year. Right now, most people who are self-employed submit the tax return to HMRC once a year. Under the new Making Tax Digital change, you will need to send quarterly updates to HMRC, and then at the end of year, you do the declaration. So instead of one tax return, there will be effectively 5 interactions with HMRC throughout the year. Making Tax Digital will be introduced gradually from April 2026. The UK government has decided that it will be applied to landlords and sole traders whose income, property or business income, is above £50,000. Then from April 2026, the threshold will be reduced to £30,000. There is also discussions about lowering the threshold further to £20,000, but the timing of this implementation has not been confirmed as I record this video. So the good news is that the change does not affect everyone straight away. So Making Tax Digital does not apply to you if you only receive PAYE, employment income, most limited companies, and people whose income is below the threshold that I just mentioned. There will be also some digital exclusion exemptions for the requirement for the people who reasonably can't use digital systems. You may be already familiar with Making Tax Digital if you're a VAT registered business. Making Tax Digital is already mandatory for VAT returns through approved software instead of manually entering them to the HMRC website. The new changes simply expand on this approach to income tax reporting. If Making Tax Digital applies to you, what you need to do right now is start keeping digital records of your income and expenses. You need to look out to find HMRC-compatible accounting software. Bear in mind, some banks are including that in their business account offering. So check with your bank first, I would say. You then need to send quarterly updates to HMRC and then submit a final declaration at the end of the year in the usual timescale. This means that the bookkeeping will need to be more regular rather than just being once a year activity for small businesses. If the new rule change doesn't apply to you now, I think there's still good practices to be applied straight away. For example, you could start saving your records digitally as a means of business record keeping that is required anyway. Secondly, consider using softwares, accounting softwares like Xero, Free Agent, or other options available rather than your spreadsheets. And third, make sure you keep track of your income and expenses regularly, just to keep an eye on how your business is doing and whether you're reaching this threshold that HMRC has set. Doing this now will make Making Tax Digital switch over much more easier. Making Tax Digital might sound like a big change, but the idea behind this is just businesses to start using digital records and submitting their updates through HMRC approved accountancy softwares. The other goal is to make the reporting more accurate and more regular and manage it throughout the year. Understanding these new rules will save any small business owner or sole trader a massive headache in the future. So let's get on the Making Tax Digital train now. Choo choo!